Hi, I'm Jarrad Brown. Thank you very much for tuning into my video today. I'm the Australian expat financial planner based here in Singapore, working with Australians all over the world. In today's video, I'd like to share with you some top tips for Australian expats when it comes to reducing their tax back home in Australia. Now, we're nearly at the end of financial year. Financial year, for anyone who's not aware in Australia, is 1st of July to the 30th of June. Now, if you are living, working overseas, and you don't have any taxable Australian income, this video is not for you. But if you do have rental income, if you have royalties, if you have other income in Australia, this is something you need to pay attention to. So what we're going to cover are my 4 top tips, 4 things to consider when it comes to reducing your tax in Australia. So let's dive right in. Now, my first tip for you to consider is prepaying interest. Now, what this means is that if you have tax deductible debt, i.e. a loan on an investment property, for example, a mortgage with the bank, you can speak to your mortgage broker or speak to your bank and potentially prepay up to the next 12 months of interest at an agreed upon rate and bring forward that tax deduction into this financial year. Now, why would you want to do that? Very simply to bring forward that tax deduction into this financial year, and potentially you do exactly the same thing next year. Now, if you're thinking this through and wondering, well, what about when I run out of time? What about when the loan reduces? What about when I can't do this anymore? By then, potentially you're back in Australia, tax rates may have changed, you may be in a different tax position, so make sure that you're thinking through how this will work over time. But of course, be sure to speak to your tax agent, your accountant, and make sure it's going to work for you. My second tip for you is to consider any prepaid repairs, maintenance, when it comes to investment properties in Australia. Now, we are specifically referring to Australian property here, and particularly residential property here. You have both capital improvements and you have repairs and maintenance to restore the property to its original condition. Now, they are treated differently for tax purposes, but if you do need to repaint or repair the property, replace the air conditioning, whatever it may be, you may be best off bringing forward those tax deductions into this financial year, again, so that you can claim that tax deduction. So speak to your property manager, speak to your accountant, and just review what your options look like there. My third tip for you is to consider superannuation contributions. Now, far too many Australian expats that we meet simply ignore their super. It's in multiple accounts, they don't know where it is, they don't know which provider it's with. This is simply money that is going to waste for you and potentially being chewed up in fees, and particularly if you're not monitoring the performance of it, you may just be setting money really to waste for you. So very important that you know where it is. Very important that we're not wasting fees, but more importantly, you could be eligible to contribute some money to your super fund and again, claim that tax deduction. Very important to seek tax advice with this one. Speak to your Australian financial planner, speak to your tax agent, and review your options here, because it may be a very simple way to both boost your retirement savings and also reduce your tax liability. So explore your options with this one. My fourth and final tip for you is to explore any tax agent, accountant, or financial planning fees that you may be able to claim a tax deduction for. If they are specifically for your Australian investments, Australian income, you may be eligible to claim that as a tax deduction against your other Australian income. So be sure to review this. If you can claim the tax deduction, make sure you speak to your accountant, review your options. You may also want to speak to your financial planner about even bringing forward next year's fees. So speak with them, review your options, have a look at what you can claim in this financial year, and don't pay any more tax than you should. I hope you found this helpful. If you have any tips, questions, please drop me a note in the comments. Feel free to reach out to me via email or any of the contact details listed below. Please remember to subscribe. Thank you very much for tuning in, and I look forward to seeing you next time.